Have you ever wondered how the best investors seem to strike gold even when the economy's in a downturn? In fact, recessionary periods are usually the determining factor that sets apart good investors from the great investors. Market downturns can present a lot of opportunities, and by the end of this video, you'll know exactly how to thrive. When the market starts to trend downward, you really have to dig to find those hidden gems. There's a method to the madness, and I'm here to break it down for you. Getting the money to buy these properties is another challenge, and that's why we'll cover the nitty-gritty of securing financing during an economic slump. I will also reveal the #1 safety net strategy for any recession-resistant investor, as well as some other secrets you should know about. So join me as we navigate the tricky but often profitable waters of investing during a recession. Trust me, you don't want to miss this. First, let's talk about identifying opportunities. As we enter into a recessionary time, don't pigeonhole yourself just to think about distress. Distress is one area of it, but there are motivated sellers. Right now, let's say, for example, in the multifamily arena, there's people who are experiencing pressure because they bought thin, or their interest rate has gone up, they didn't have a cap, or their loan's coming up for maturity. They maybe want to sell right now, but pretty soon they're going to have to sell. And so that's where you begin to seek out motivated sellers. That's through networking. It's through connecting together in the marketplace and understanding who those sellers are. And, we talked about before, you can direct market to those people. You can connect through brokers. You can connect through networking. Another area is in the distressed properties. You can drive around and see which properties in the marketplace represent well taken care of and those which don't. Those which don't, you can often reach out directly to the property management company or the seller and the owner to begin to find out what kind of opportunity it is that exists that they want to sell. The other is REO. The bank has already taken the property back and they're putting it up for sale. Now, a ninja tactic that you can use is to connect together with the property management company to find out from them what properties may be coming available. They know they're managing the property and it's not paying its bills. They know it. Just as a side note, we already have a lot of those relationships and we're already hearing the news right now. And so we're going to be having those as opportunities in the future. And then lastly, let me say foreclosures. That is also a great opportunity because, again, it's a public foreclosure. It's going forward. It is a property that's going to be coming available, either one through the foreclosure itself or as it becomes an REO. So also be identifying to look out for just opportunities in the marketplace, right? Somebody that's looking to sell, they may have owned it for the last 10 years. And so the reality is they can sell it now and get a great profit from it. And the property's still in good condition. We've bought plenty of properties that way where we've come out massively ahead, and so can you. Next, let's talk about negotiation strategies. Really, you've got to first and foremost begin to understand what is the other person looking for in this sale. Now, again, I know intuitively you go, oh, they'd look to get the money from it. But there's different components to it, right? Are they looking for cash quickly? Are they looking for certainty of close? Are they looking for the maximum price or are they looking for the best terms? What I mean by that is like a person's looking for certainty of close, you could put down a significant amount of hard money and that helps them to be willing to accept a lower price because they now have certainty of close. If the person's looking for faster cash at closing, genuinely there are lenders, not many, but there are lenders that can get it done and close in as less as 30 to 45 days. And so that can be a negotiation and motivating tactic. If you're looking also too, some people are looking to lower and reduce their tax responsibilities. So it could be talking about a seller finance tactic. There's a lot of different strategies that you can look at. The other piece is you not only want to find out what they're looking for, but you also need to try to find out what their pain point is. That's through a process of discovery to find out what's the real reason that they're selling. And now sometimes you're working with the broker because that's the intermediary between you and the seller. You've got to be willing to connect with them and be able to uncover, if you will, that information because that's going to serve you on how to best structure your offer. And then lastly, I would say you simply ask What are they looking for? If you're enjoying this video, make sure give it a like, subscribe to my channel, and comment down below what you'd like to learn next. Third, we want to talk about is focusing on cash flow. During a recession, cash flow is king, right? Plenty of people bought opportunities with the upside potential in the market of past. That's not the market of present, really. And again, even for us in our firm, we've always focused on what's the cash flow, because cash flow is key and significant to your daily performance. And so you want to look at the property that you're looking at for a recession buy. Does it have cash flow right out of the gate? What does that look like in relationship to your loan and cost expenses? I would say this, for us personally, I'm not looking to be in a thin or negative cash flow position in a recession. I want to be in a position where we're buying a property that has positive cash flow going in day one. Now, that being said, if you were to acquire a property that has a significant discount, and I would be hesitant to even tell you the depth of that discount, but I would say that it's got to be absolutely significant to offset a reduction, temporary reduction in cash flow. And what I mean by that, right? So there's a property that you're looking at, it's got 30 vacant units out of 100. Well, you're going to have an immediate cash flow problem there. That's got to be reflected in a lower price. And then you also have to have a rock solid strategy in your acquisition and financing, which we'll talk about, to be able to go in, get those 30 units turned over quickly, and then rent it up to improve that cash flow. So that's another way to make a great return in a recessionary moment. Next, let's talk about securing financing. And so financing can be tougher to secure in a downturn moment and economic volatility. So the importance, one, of really the relationships that you have. You've got to have good quality relationships, and you also need to have a good quality balance sheet, right? I mean, and you know, when you're talking about multifamily investments, they're looking at the property as an overall performance piece. But again, they're looking at what's our relationship. In a real way, we've had properties where we extended the loan because of the length of time we were in the property. And the relationship we had with the lender, they're like, yeah, no problem. Here's the extension fee and cost to extend it for another year. Again, virtually all of our loans, if they're a 5-year type term, it's minimum 3 years with 2 one-year extensions built in. That's a safety net, even though the timeline is intended to be for 3 years. It gives us additional time if we need it. But having that relationship is key, because then they're going to be more flexible and willing to work with you. As I said, also the balance sheet. You've got to have a healthy balance sheet, meaning you've got to have a stronger net worth. The stronger your net worth, the more that they're going to be desirous to working with you. Now, if you say, well, hey, Randy, I don't have a real strong net worth, that's where you could partner together with somebody who does have a higher net worth, and then combined, now you represent a stronger financing option. And again, I would say, look. You've got to go, man. Like, think about Walt Disney, right? He was trying to get Disney World off the ground, turned down by 100+ institutions. You've got to keep going and make those connections in advance before you need the financing. You say, what do you mean by that? No, go in, start developing those relationships, find out what they're looking to do. I did that last year with a group of probably 10 bankers to find, who are the people that are looking to participate in lending money today. Lastly, I would say you've got to maintain a long-term perspective, right? So investing in real estate and doing it successfully really has, by its own nature, a longer-term outlook. Even in a recessionary period, by usual standards, it's anywhere from 6 to 18 months is the historical reality of that. Your more normative is in that 18 to 24 months-ish type time frame. But when you look at an overall real estate cycle, majority of real estate cycles then are compounded with great cycles over a period of at least 8 years. The last one that we just came out of, call it back in 2010, was roughly 12 years, 11 years. And so real estate is a longer term perspective. So even if you're making an acquisition right now in a recessionary period, you've got to look at it and look at it from the context of you're buying a great asset that's going to perform well. You're going to do the things that need to be done work-wise at the property, and you're going to have a solid performing asset over the next 3, 4, 5 years and beyond. Hey guys, I have a free gift for you in the description of this video. I'm here to keep you informed so that you can make the best decisions when it comes to investing your hard-earned money. I'm giving you my free guide to investing in multifamily real estate, which gives you all the insights I've gathered over the past 20 years of investing. Click the link in the description to download it today. That's all I have for you today, folks. I hope you were able to learn a lot today, and I'll see you in the next video.